Bitcoin's massive performance in 2023 is, on the one hand, relatively positive, and on the other hand, concerning. Why is it positive? First, what we see is that Bitcoin is setting itself as an asset class of its own. It's separating itself from other cryptocurrencies, and it has been performing adequately as a reserve of value in an environment of choppy markets, particularly in the bear market of August to October. So Bitcoin has been slowly moving to become money. It's not yet a reserve of value. It's certainly not a generalized means of payment or a unit of measure. That is what would be the reason to think that it is real money. But it is startup money. And as startup money, it is setting a difference with the rest of the cryptocurrencies, and is setting a difference with those most volatile currencies and other systems in the crypto world. Absolutely. However, there is a negative, is that Bitcoin continues to be too correlated, uncomfortably correlated with tech equities, with equity markets. In essence, it tends to perform better in an environment in which the market goes up. So instead of being decorrelated from the process of monetary destruction, it is very uncomfortably correlated with the most volatile and the most beta-driven stocks and asset classes. And that is precisely because it is a fact that it will continue to improve, but it is also a fact that it needs to find its own liquidity. And the next graph is very important in that factor. How will Bitcoin perform in an environment of cutting rates and liquidity injections? It is very likely that it will continue to do well with those assets that are driven by high beta, those high duration, high volatility stocks. However, we need to be aware that what doesn't work in the case of Bitcoin is that if we see a significant monetary contraction, and central banks don't do this, because it's very unlikely that central banks will cut rates so aggressively if the economy is in a slowdown but not in a crisis. So the big question out there is, how will Bitcoin perform relative to equities and relative to bonds in a choppy market? The most likely scenario is that we will also see severe volatility. The process of becoming money is slow but sure, but we also need to understand that it's not always a process of asset price increases. Thank you very much for following.